Hi everybody! Welcome back to Tips for You. Many of you have read my profile and know that I am interested in the stock market and that I've taught myself to be an investor in the stock market, a small investor, and you've expressed an interest as well and wanted to get into the stock market yourself. And I think that's wonderful, and nowadays with all of the online trading accounts that are accessible to just about anybody because they have low fees, no required minimums, many of them. Some of them do. You'll have to, and I'll tell you some that I think are worth looking into because they have lower fees and no required minimums for investing. And because of that, it's easy for a small investor now to get in with their small amount of money. And I don't think any amount of money is too small. You can start with, $500, as long as it's not money that you don't think you're going to need in any close amount of time. Say 5 years. I mean, if you're saving up for that new car, or you want to buy a house, or you need the college money, or whatever it is, it's not a good place to put your money because it's risky. As you know, especially recently with the way the economy has been, the stock market has been even more volatile than it normally is. But it is considered a risky investment. And within that risk, there's high risk, medium risk, and low risk. So the higher the growth of the company, or the projected growth of the company, the more risky the investment is going to be. So I wanted to give you a few tips. If you wanted to get into the stock market, or maybe put a little bit of money in each month or every several months, just so that you can stay involved, because it is a great way to make money. And in the long run, you will be happy that you did. It's hard to say that now. If anybody bought stocks 10 years ago, many of the stocks that we have right now, great companies, are trading at half the cost. But you've got to believe in America, and I do. I think we're going to get out of this. Everybody's very optimistic with our new president. So I think we'll all be in for a turnaround. So first, what I do, whenever I start any new project, and especially this one, I need to get an education in it. So I started reading, and I took out books by Warren Buffett, but probably the best book I can recommend to you that you should read before you dive into the stock market is by Jim Cramer, and that is called Real Money: Sane Investing in an Insane World. I'm sure many of you might have seen Jim Cramer. He has a show on CNBC called Mad Money. And I think he's great. A lot of people give him a hard time because his show is full of entertainment. He kind of makes it fun. He's got sound effects that he rings buzzers and he does things, and he puts funny hats on, and he tries to get you into stock investing in kind of an entertaining way. But what he does show you is what to look for in a stock and a company when you want to invest in one. And he breaks it down in a simple fashion for a layperson to understand, which I think is very helpful, especially initially when you start looking into the stock market. Try to catch his show. It's on CNBC. It's called Mad Money. I really recommend you read his book. His book goes into just about everything you need to know and look for when you consider purchasing stock in a company, like the price-earnings multiple, which is the ratio of what we pay for a stock versus the earnings we will get off of that stock. And they assign a multiple to that based on that ratio. And investors will buy the stock based on the multiple that it is assigned. The higher the multiple, the more value and growth that's in the stock. And companies are broken out into value companies and growth companies. Obviously, you're going to get a better return from a growth company. Their stock price is going to usually be the ones that go higher. Value companies are more dividend plays, which are great too. They're safer as far as stocks go, and they usually will, give you a nice little generating of income into your portfolio over time. Things like utilities, IBM. Just real great, sound, Coca-Cola type companies. Start with things that you know, companies that you're familiar with, products that you like, and start with those stocks. Look into those. I tend to like ones that have high growth. I have certain stocks that I like, that I study, that I got familiar with, and that's kind of all you need. You don't need to know everything about everything. You can really kind of home in on something that you like or an industry that you like, pick out a few good companies. Always stay diversified in your portfolio, because when the stock market goes down and certain segments or industries go down, at least you're in some other things that are doing well that day. And you're not looking at your portfolio and seeing just a big line of red because all of your stocks go down. It's just disheartening. So the best thing you can do to guard against losses is to diversify into different industries. And I do that. And even if you have a small amount of money, it's still great. You can buy, 3 shares of Apple and 2 shares of Caterpillar or something like that. And you can start small and you build your portfolio over time. And you add to that. You add to those positions. And you've got to use common sense. I mean, if you see that your stocks are up an unusual amount, which has been happening nowadays because of this volatility, and you'll see if you look at the VIX index, which is an indicator of volatility in the stock market, that it's just way up there. It's been up at 80, and then it'll drop down into the 40s. But still, overall, it's very high. That means there's a lot of fear out there, and people selling right away on bad news. Another great show that I can recommend for you to watch is Fast Money. The guys on there are terrific. That's also on CNBC. It's got a panel of traders on it, and they talk to you about their ideas and what they think a stock is going to do, and analyzing the growth and the new products coming out and how they think it's going to affect the stock. I'm sure all of you are probably wondering some of the stocks that I like to invest in, so I'll give them to you, but I'm not going to recommend them to you, because I think you should really look into some things on your own, see what you like, and whether they're investments that you want to make. But just to name a few for you, I like Apple, I like Research in Motion, which is the maker of the BlackBerry. I like Visa, I like MasterCard, I like Caterpillar, the great industrial giant. I think these companies are going to recover very nicely if the economy gets back on its feet again. I like Nucor, steel company. What else? I guess that's enough. Oh, Google, the parent of YouTube. That's a great company, growth stock. It's an expensive stock, but it's got good growth, so it's a great company. He's never, Eric Schmidt is the CEO, they've never had a stock split, so the company has just let the stock run up. The stock's now priced about 300 and something, 350 or some around that dollars around there, and it's been as high as $700, so it's really it's a great stock. But anyway, that's just a couple of tips for you on how to just go about getting into a new endeavor. The internet is a wonderful tool to use for you to look for information. I use yahoofinance.com for my information gathering, for key statistics, for news and press releases on the companies. And just before I go, because I may run out of time, I just wanted to tell you the trading platforms that you can look at that are cheap out there. There's Marsco.com, which has $3.95 trades. So every time you buy stock, you pay $3.95. Every time you sell stock, you pay $3.95. So $8 a trade, roughly, is a very low-cost trading commission. I use Zecco.com, which is another low-cost platform. They used to offer 10 free trades every month, but they don't do that anymore, which is a bummer. And I got into that one when they did that. So I hope you'll consider the stock market if it's something for you. Again, put some money in over time so you can take advantage of dollar cost averaging. Read Jim Cramer's Real Money book to get familiar with the terminology, what the stock market's all about. He'll give you the feel of it, the flavor of it. Watch the television shows, use the internet, try to get familiar with the language, and lots of luck to you. I hope you enjoy the stock market as much as I do, if it's something you would like to do. And be careful with your money. Don't invest anything that you don't think is just kind of spare money. That's what I like to use. Just money that is kind of spare money, not earmarked for anything. Okay, thanks so much for tuning in, and I hope you enjoyed our financial tips for today, and I hope you'll subscribe, because I have lots more to come, and I'm going to have some more financial videos coming up too with help on that. Alright, thanks so much. Bye now.